So today we're looking at Visa. What I think about them as a stock, whether you should buy it, hold it, or sell it. Um, Looking at the current market price, it's around 191. Over the past year, it's gained about 13% roughly. So it started the year around $173, and now it's about 191. I currently have two shares of Visa, and my total return's been $45 or 13%. That's a little more important than the money. It's been around since 1958, and we all know what Visa does as a credit card company, but it's not going anywhere. And I actually purchased it. And the nice thing about Visa is they give away a lot of dividends. Let's see, when did I actually purchase them? Anyway, moving on. So here I just looked at Visa with candlesticks and the S&P 500 with just a line graph. I like candlesticks because I think they give a little bit more information. Those are actually bars, but here are candlesticks, so you can see it over the past year. Obviously, the dip with the coronavirus, and then it comes back later. The total return has been about 13%, whereas the S&P 500 has been about 6% over the last year. The nice thing about Visa is over the last 5 years, it has this very positive linear correlation. So I think it's one of the safest stocks to buy, just because you can see that's going up and up and up and up after year and year and after years later. But it's not going to give you that much return on investment, but it's going to be continuous. So over 5 years, S&P's returned about 47%. Visa's returned about 190. Keep in mind, it's really skyrocketed these last 5 years, so it's not expected to keep doing that 5 years later. So moving on from TradingView to Simply Wall Street. Simply Wall Street has this nice snowflake. So there's the future, health, and past. The past has been very good. Health's good. Future's good. And they do give away a lot of dividends, so I'm surprised there's no checks here. But they're expected to grow about 13% per year, which we just saw. That's in the summary. Here you can look at the share price and news. Over the last year, obviously, with the coronavirus, they're going to have a lot of changes in finance management strategies, and they're going to give out a lot of dividends as incentives for people to stay with them. So you can actually click on them and just see, or I guess unclick them. So you can see, they do give away a fair amount of dividends. So there's a share buyback, dividend increase, that kind of thing. Looking at the 7-day return, that's not really important, but looking at the 1-year return, yeah, it's about 12 to 13%. Depends on who you ask, really. But the U.S. IT as a sector is about 13%, so it's a little bit lower, which means it's safer. And the U.S. market is about 5.3%, so we saw that in the S&P 500. Moving on, the price to earnings ratio. So whoever the analysts are for Simply Wall Street, they think a fair value for Visa is about 134. Their current price is about 194, so it's overvalued by 45%. I'd say that's pretty true. I think it should be around 170, 160, so I do think they're overvalued as of right now. You can see all the ratios here, or at least the most important ones. Let's see the future growth forecast as a company. It's about 13%. The IT sector, so the industry part, is 25%, and the market's 23%. So again, this would be more of a safety stock that you just hold and just to help diversify your portfolio. And you can see with the forecast, it's expected the earnings per share is expected to go up to 8.4 around 2025 as well. Let's see what else we have here. Return on equity, so they have 36%, industry 17%. And the balance sheet, they have about $55 billion in assets and about $18 billion in debt, so that's a good asset to liability ratio. And that's everything.